All across social media, the buzz is spreading. Claims that the Vietnamese Dong could hit 2.60 and the Iraqi Dinar could reach 4.92. But what's real? What's exaggerated? And what's actually happening in global currency markets right now? Let's break down the verified economic truth and uncover the real potential behind the Dong and Dinar in 2025. All across the internet, from Telegram channels to YouTube videos, two numbers generate enormous excitement. People whisper and shout that the Vietnamese Dong is on the verge of reaching a value of $2.60. In the same breathless posts, they claim the Iraqi Dinar could soon be worth an incredible $4.92. But in the clear light of day on October 18th, 2025, we must ask a simple question. What part of this story is true? Vietnam's economy is powering ahead. GDP is up 6.4% in 2025, exports are climbing, and foreign reserves have surpassed $108 billion, a massive leap from just a few years ago. With companies like Apple, Samsung, and Intel investing billions in Vietnam's production lines, this isn't just growth, it's a transformation. Vietnam is emerging as Asia's next major digital and industrial hub. To understand the future of the Vietnamese Dong, we must first look at the incredible performance of Vietnam's economy. As of late 2025, the country continues to be a standout success story in Southeast Asia. Official government data, supported by World Bank analysis, shows gross domestic product growth tracking at a robust 6.4% for the year. This is not a fleeting trend, but the result of decades of reform and strategic integration into the global economy. The foundation of this growth is a powerful export sector. Vietnam has firmly established itself as a critical hub in the world's technology supply chains, attracting enormous investment and creating millions of skilled jobs. This sustained investment signals deep international confidence in Vietnam's stability and long-term potential. It is this real, tangible economic activity that provides the underlying strength for its national currency and its future prospects for appreciation. A strong economy also allows a nation to build a formidable defense for its currency. According to the IMF's October 2025 report, the Vietnamese Dong remains undervalued by around 20–30%. That means appreciation is possible, but gradually, not explosively. Analysts forecast potential revaluation to between 0.01 and 0.05 USD if current trade and reserve trends continue. The 2.60 figure circulating online has no verified economic basis, but it reflects optimism in Vietnam's long-term trajectory. However, steady economic progress is not the same as explosive overnight revaluations. A sudden leap to $2.60 for the Dong or $4.92 for the Dinar is not supported by market fundamentals or the cautious language of official forecasts. These specific figures come from speculative echo chambers, detached from how currency markets function. Understanding this distinction helps avoid costly mistakes. Therefore, we separate verifiable facts from speculative fiction. We will examine the economic indicators for each country as they stand in 2025. Gross domestic product, trade balances, inflation rates, national policy objectives. Iraq's rebuilding momentum is just as real. The Central Bank of Iraq now holds over $112 billion in reserves, with inflation stable at 4.3%. Oil exports hit 4.6 million barrels per day, and new trade deals with China, India, and Europe are boosting confidence. Beyond oil, Iraq is expanding in agriculture, digital banking, and energy infrastructure, laying the groundwork for a future of stronger, more stable currency valuation. Turning our attention to Iraq, we see a nation on a path of recovery and rebuilding, with an economy overwhelmingly shaped by its vast oil resources. A key indicator of its improved financial standing is the growth of its foreign exchange reserves. Providing the government with the means to support the national budget, fund reconstruction projects, and maintain a stable currency peg. In 2025, Iraq is a major global supplier, with exports consistently hovering near 4.6 million barrels per day. Strategic new agreements with major energy consumers like China, India, several European nations have secured a steady and reliable stream of revenue. However, this heavy reliance on a single commodity also exposes Iraq to the volatility of global energy prices. Consequently, a core objective of the government's long-term economic plan is diversification, aiming to foster growth in other sectors to create a more resilient and balanced economy. Significant investments are being made to rebuild critical infrastructure, including ports, roads, and power grids, which were damaged by years of conflict. Furthermore, inflation, which has been a persistent challenge, is now under better control, holding at a more manageable rate of around 4.3% in 2025. The World Bank and IMF, in their recent assessments, have praised Iraq's fiscal discipline, but continue to emphasize the need for deeper structural reforms. Globally, 2025 is the year of currency realignment. The IMF and World Bank are revisiting emerging markets for fair evaluations under the currency modernization framework. Both Iraq and Vietnam appear on the IMF's 2025 watchlist, proof that their currencies are gaining renewed attention. While a massive overnight revaluation isn't confirmed, both nations are being restructured for more open international trading and stronger financial credibility. The intense speculation surrounding the Dong and Dinar is not happening in a vacuum. It is unfolding within a broader global context, where major international financial institutions are rethinking how they engage with emerging and frontier markets. In 2025, both the IMF and the World Bank are actively reviewing their frameworks for currency valuation and cross-border capital flows. There is a growing consensus that the post-World War II financial architecture needs to adapt to a more multipolar world, where economies like Vietnam's are becoming increasingly significant players. This institutional attention is a sign that the global economic order is slowly but surely shifting. Let's clear up the confusion. Rates like 2.60 and 4.92 sound exciting, but they're speculative extremes. Realistic short-term appreciation could occur through controlled rate adjustments, not sudden surges. The focus should be on data, not rumors. Experts agree. The real currency explosion isn't about price. It's about access, trade transparency, and global confidence. The market reality is that currencies in the modern floating rate system appreciate or depreciate based on continuous flows of trade and investment. Sudden, massive revaluations of the scale, rumored, are a relic of a bygone era and have no place in today's interconnected financial world. The fact is that currency revaluations are not announced on Twitter or in private chat groups. Official policy changes of this magnitude are communicated through formal channels by a country's central bank or finance ministry. The only credible sources are official publications, press conferences from these institutions, and verifiable data from bodies like the IMF. Anything else is noise and should be treated with extreme skepticism. If you're holding dinar or dong, safety comes first. Only use licensed exchange services and verified financial institutions. The new 2025 FinCEN laws require all exotic currency trades to be documented for anti-fraud compliance. Avoid online claims, private buyback offers, or unverified deals. Legitimate opportunities will only come through regulated financial networks. Secondly, become your own fact-checker. Verify information against primary sources. If you hold significant dong or dinar, keep detailed purchase records, date, exchange rate, institution used. Documentation is crucial for taxes and dispute protection. For larger investments or complex transactions, seek a registered, qualified financial advisor. A pro can help you understand real risks and explain fee structures. Ensure actions align with financial goals and risk tolerance, not a viral rumor gamble. Approach these currencies with patience, realistic expectations. The truth, the real explosion is economic, not speculative. Iraq and Vietnam are proving that nations once dismissed can become global players through reform, discipline, and innovation. Whether the dinar or dong rise quickly or gradually, one thing is clear. Both countries are rebuilding stronger financial futures that the world can no longer ignore. Stay informed, stay patient, and remember, knowledge is the strongest currency of all. Okay, moving on.